All right, get ready, because we are diving deep into high-frequency trading today.
Definitely exciting stuff.
You sent over some audio from a trader who really knows his stuff,
Yeah.
particularly when it comes to the connection between volume price and liquidity.
He uses this analogy of a three-way dance,
Ooh, I like that.
which I love.
Yeah.
It really gets to the heart of how these elements are constantly interacting and influencing each other.
It's like instead of just looking at buy and sell, we're going behind the scenes to see the real moves happening in the market.
And what's so refreshing is that he doesn't just throw around jargon like price action.
Right.
He actually breaks down why understanding this dance, this interplay, is crucial if you want to make sense of those split-second price changes we see.
So it's like if you can master the steps, you can predict the music.
Exactly. He uses this example of buying 5 contracts.
Okay.
Sometimes it barely makes a dent in the market. Other times it's like dropping a boulder in a still pond.
Oh, wow.
And he says the difference comes down to the relationship between volume and liquidity.
Okay, so it's not enough to just see a price on a screen. We need to understand what's behind it.
Yes, exactly.
So tell me more about this volume and liquidity connection.
Sure. So imagine a market with tons of buyers and sellers. That's high liquidity.
Okay.
It can absorb large orders without causing any drastic price swings.
Makes sense.
But then you have low liquidity, and it's a completely different story.
Right.
It's like everyone's trying to squeeze through the exit at the same time.
Oh, boy.
Even a small order can trigger a huge price move.
Which is where this idea of slippage comes in, right?
Right.
The trader talks about it like it's this hidden cost in the market.
It is. It's the difference between what you think you're paying for something and what you actually end up paying.
Okay.
So let's say you put in an order for a stock at, say, $10.
Yeah.
But before your order goes through, the price jumps to $10 and on 5.
Okay.
That 5 cents is slippage.
So bigger slippage usually means the market is having trouble keeping up with the orders coming in.
Precisely. And that's where it gets really interesting because high slippage, especially on large orders, can be a sign of things to come.
Really?
It could be a leading indicator of potential momentum.
Interesting.
It's like the market is giving you a little whisper saying, hey, something's brewing over here.
Now, this trader, he doesn't shy away from talking about market makers.
No, he doesn't.
He seems to think they play a pretty significant role in all of this.
He does. And for good reason. They're like the facilitators of this whole market dance. Their whole job is to make sure trading happens smoothly by constantly quoting both buy and sell prices, even when things are slow.
But they're not doing this out of the goodness of their hearts, are they?
Not exactly.
He hints that they actually profit from this whole system.
Oh, absolutely.
Yeah.
Market makers make money off the difference between the buy and sell prices, what we call the bid-ask spread.
Right.
They're always aiming to buy low and sell high, but they have to maintain a balance to keep everything running smoothly.
So they're not just like matching orders like a basic computer program.
Not at all.
They're actively analyzing, strategizing, trying to stay one step ahead.
Exactly. And he even uses Citadel Securities as an example.
Citadel.
Yeah, they're considered to be a major player in the market,
I've heard of them.
which just highlights the scale and complexity of what we're talking about here.
This is where things start to get really interesting. He talks about developing a tool that tracks these market movements and alerts him to what he calls abnormally high price impacts.
Fascinating stuff.
Tell me everything.
Well, that's where we're headed next.
Yeah.
This tool. It's the key to understanding how these price movements can reveal the intentions of those big players.
Okay, you've officially got me hooked. Let's get into the specifics of this tool in part 2. Okay, we're back, and I'm ready to hear all about this tool.
All right, so it's not exactly like having a crystal ball that predicts the future.
Right.
But it does give you a unique look into the forces that drive those price movements, you see.
Okay.
Most traders, they rely on charts that only show you the price going up and down. But this tool, it digs deeper. It's designed to spot those moments, those instances of what he calls abnormally high price impact.
Abnormally high price impact.
Yeah, so those times when even a small order can create a huge price swing.
Oh, wow. So it's like having X-ray vision into the market.
Exactly. You see beyond the surface, and you can see the forces that are usually hidden.
Oh, okay. Very cool.
Remember that example we talked about before, buying 5 contracts?
Yeah.
This tool would highlight those times when those 5 contracts send shockwaves through the entire market.
Wow. So that indicates something big is happening.
Exactly.
Which would be incredibly valuable for a trader.
Oh, absolutely.
If you could spot those shockwaves early, you could ride that wave, right?
You could. But it's not just about making money. It's about understanding what's actually happening in the market.
Okay, I'm listening.
So let's say you're about to place a large order, and this tool flags a high price impact.
Okay.
That's a sign to be careful,
Interesting.
because it could mean you're walking into a market that's about to make a big move, and your order could get caught in the middle, leading to a lot of slippage.
So it's not just about making money, it's about protecting yourself as well.
Exactly. It's about being smart and strategic with your trades. And this tool gives you the intel you need to do that.
I like it so far. Now, he also mentioned something called volume profiles.
Yes, volume profiles.
And that's a new one for me.
It sounds complicated, but it's actually pretty straightforward.
Okay.
Imagine a chart that not only shows you the price movements, but also where most of the trading activity is happening at each price level.
Okay.
That's essentially what a volume profile is. It gives you a visual representation of where the buyers and sellers were most active.
So it's like a heat map of the market.
Exactly.
You got it.
Showing you the hot zones.
Yes. And he says that this is super important for understanding the relationship between volume and how the price actually moves.
Okay.
For example, he's observed that in a really strong upward trend, most of the trading volume often happens towards the end of that move, not at the beginning. Hold on, so you're telling me that the initial push, the thing that gets the price moving, might actually be driven by just a small group of buyers?
It often is.
Wow.
Yeah, it's those early buyers, the ones who are willing to pay a higher price to get in early.
They're the risk takers.
Exactly.
Yeah.
They see the potential before everyone else does.
And because there aren't many other buyers yet, their orders have a much bigger impact on the price.
Exactly, which is where that high price impact comes in.
I see. And then as the price goes up,
Then more people start to notice.
right,
They see the price going up, they see more volume, and they want in on the action.
FOMO.
That's when you get that domino effect.
Oh, wow.
More and more buyers jump in, pushing the price even higher.
A self-fulfilling prophecy.
In a way, yes. But here's where it gets really interesting. He's noticed that those early buyers, the ones experiencing that really high price impact, the ones paying a premium to get in,
Yeah.
they're often, right?
Wait a minute. Are you saying that the people taking the risk buying in when the price seems high, they're usually the ones who end up making all the money?
That's exactly what he's suggesting. And he uses his price impact tool combined with these volume profiles to find those exact moments.
That's incredible. It's like he's figured out how to read the mind of the market, or at least get a sneak peek.
That's a great way to put it.
I love these deep dives, but how does he use all this information in the real world?
Well, that's where it gets even more interesting. We'll get into the practical applications in part 3.
Okay, so we've talked about the tool, we've talked about the volume profiles.
Right.
But now the big question, how does he actually use all this in his trading?
Yeah, so he doesn't give away all his secrets.
Of course not.
He's got to keep some things for his MetaQuant platform, right?
Right.
But he does share some really valuable insights.
Okay.
He talks about using those high price impact moments, especially when you see it lined up with the volume profiles
Okay.
as a kind of signal. It's not about just blindly jumping in every time the price makes a big move.
Right.
It's about understanding what that move actually means.
So instead of chasing every little price swing, he's looking for those moves with some real conviction behind them.
Exactly. He wants to see those footprints.
The ones from those early buyers.
Exactly.
Those informed buyers.
Yeah. And he says that by studying those moments, you can start to get a feel for the market's sentiment.
The market sentiment, how do you mean?
Well, like, are those early buyers acting on some kind of insider information?
Ooh, juicy.
Maybe, but a lot of times it's not that simple.
Okay.
They might be looking at the same news, but interpreting it differently.
Interesting.
Or maybe they're just really good at predicting how the market's going to react.
So it's almost like they have this sixth sense
You could say that.
for where the market is headed.
Yeah, and by tuning into those same signals, by understanding how volume and price impact and volume profiles all work together,
Right.
he believes you can start to develop your own intuition about the market.
Okay, so that's really interesting because even if you're not a high-frequency trader,
Right.
even if you're just, an average investor,
Exactly.
this knowledge is still valuable.
It changes how you view the market.
Exactly. It's like I was looking at the market through a straw before.
Uh-huh. I like that.
And now I can finally see the whole picture.
Exactly. And once you see the bigger picture,
Yeah.
once you understand the forces at play,
Right.
then you can start making smarter decisions.
Okay.
Whether you're a day trader or a long-term investor or just someone who wants to understand how this whole thing works.
This has been amazing, honestly.
Me too.
So if we had to boil all of this down to a few key takeaways for our listeners,
Okay.
what would you say are the most important things to remember?
Well, first off, don't just focus on the price.
Okay.
Pay attention to the volume, the liquidities. Try to get a sense of the order flow. Learn how to read between the lines.
It's like learning a whole new language.
The language.
The language of the markets.
And second, the market is always changing. What works today might not work tomorrow.
True.
So you got to stay curious, keep learning, and don't be afraid to try new things.
Solid advice. This has been a fantastic deep dive.
I agree.
A huge thank you to our trader friend for sharing his knowledge with us.
Definitely, he gave us a lot to think about.
He really did. And to all of you listening out there, keep exploring, keep asking questions, and most importantly, never stop learning.